Sagarika Mukherjee, research analyst at SBICAP Securities. She joins us right now on the show. Sagarika, great having you. Thanks so much for joining in. Now, immediately I would want to come to you on a news peg, and that is the price hike undertaken by ITC yesterday. And we were trying to figure out as to whether this has been done to combat any kind of excise duty pressures or otherwise, and we didn't find anything to that impact. So one, the impact of the price hike, and two, what's the call on ITC as a stock?
So the impact is definitely going to be positive because they had to pass on the price, the excise duty hikes, which was done with, we thought that in the first half, but I think there was some more that came in. So it could also be that the price hike that has come into the market right now could have been taken in the last quarter and probably has reached the market only now because there is always an inventory in the channel. So it could be one. So because as far as we understand from the calculations that the increases in the prices that they're taken was enough to sort of cancel out the negative impacts of the excise duty.
So are you revising your targets on ITC?
No, we already have a very high target of 400 rupees on the stock, and we feel it's one of the best earnings growth story in the sector even now, considering that they have come and announced that they are seeing some softening of volumes. In fact, the volumes have actually worsened in cigarettes in second quarter compared to the first quarter. It was 1.5% degrowth in first quarter, and then it went down to be -4% in the second quarter. However, I think the price increase that they have taken will sort of balance out the negative impact of the volumes. So at the end of the day, they'll still show a significant margin expansion in the cigarettes business at least, which has led to the company showing strong margin expansion. So the earnings growth momentum doesn't get hampered anywhere. And it's also on a valuation basis. If you see, it's currently just about trading at the sector valuations of 34 times and 28 times, which is at par with the sector right now. And we are kind of feeling that it's better to sort of upgrade this stock where there is a lot of earnings visibility compared to the others.
I'm guessing you have a sell call on HUL. So, that I'm guessing is a clear distinction. You like ITC, you don't like HUL. What about the broader market stocks? And non-ITC, non-HUL. Which is the one that you like the most? Because there's a slew of companies which have come out with reasonably good numbers as well. Yeah,
see, I feel right now one broad theme that is coming across is definitely that the slowdown has hit everybody. Right. Because if you see, yes, on reported number basis, yes, there are many companies that have done really well with them, but then there are some segments soaps has seen a slowdown across the board. Any company in that segment has not shown good numbers. If you see hair oils per se has seen a lot of slowdown, be it Dabur or Marico. So there are some segments which have seen slowdown, but then it depends on what kind of products are you in. Let's say if you're in a hair oil but in a sort of a seasonal product only, then you might not see so much of a slowdown. It could be very niche category, so you could probably still continue seeing some growth, a good volume growth. So it depends. But again, then from the earnings growth perspective, if you see, yes, there are some companies which will outshine the others. Definitely, like Dabur will outshine because the international business is also doing very well right now because they've just put all the organizational restructuring done in the international business. So the growth is high there. Whereas if you see in Imami, there is a lot of margin expansion because menthol prices are down by 20% and menthol comprises almost 40% of their raw material. So that gives them a big jump. So earnings growth is definitely very high. You also have to keep, another thing in perspective is that the ad spends are not really reducing anywhere, even with the slowdown. People are still going with new product launches. If you see, Dabur in the last quarter actually did a couple of launches and relaunches. So, you are definitely not seeing a severe cutback anywhere in the ad spends also. So it seems as if there are some segments that have got hit, but the companies are not really pressing the panic button as yet and cutting down on all the costs. There is a margin expansion because raw material prices are also down. Sure. In some comfortable level at least. So there is earnings growth, but then the valuation is also over the top now because there used to be two tiers in terms of valuations between the large cap and the mid caps or the smaller companies and the larger ones. But then now you can see that GCPL, Dabur, Marico, they have all crossed above the sector valuations and they are almost touching HUL levels. They have not, none of them are almost at par with HUL, but then the barrier between the two has definitely reduced.
So how come you're suggesting a hold still? I mean, are you not calling for profit booking for some of these names which run ahead of themselves?
Yeah, because there are some triggers that we feel
is a hold for you.
Yes,
Dabur is a hold for you.
See, we don't see more than if you don't see more than 15% uptick in the stock price, then it becomes a hold for us. So that's how it works out. If it is definitely significantly higher than 15% is when we turn it into a buy call. So definitely the upside is there, but then in a way I'm saying that the whole sector has limited upside. That's why most of the calls would be hold.
Fine. One final question. We are running out of time, Sagarika. Tata Global Beverages. It's corrected a bit. Everybody likes the story. Not a clue about the valuations. What's your call on the stock 12 months, 18 months down the line?
See, this year the company will see a lot of benefit coming in from lower tea prices. Indian and Kenyan tea prices are down 3-4% in India and at least 30% in Kenya, so that's going to benefit them. And coffee prices are down by 30%. So all of this goes into the 250 bips gross margin expansion for the company. However, the top line is definitely under pressure because outside India, which is basically 70% of the business, that's seeing a lot of pressure in US and UK, structurally seeing a decline of growth there in the black tea market or the coffee market in US. So the only growth engine here for Tata Global remains the Indian tea business, which is doing fantastic actually. And if you see the growth in second quarter has been 18%. So yes, there is some part of the business that is growing, but then the margin expansion that you're seeing because of the lower tea prices is also getting consumed because of high ad spends and promotion spends in abroad. Because it's more competitive, more mature market, so you need to spend that. So overall, we don't think the earnings growth is going to be that high for Tata Global, and the returns also are not that high. It's sub 10% return on equity sort of a thing. So the margins are not going to be significantly higher. The only ticker probably could be here and there because of the lower coffee or tea prices, which could provide a uptick. But we still have a sell call on the stock.